I just read an article or saw an article on investing.com, pretty popular website. And the headline of the article was, "Is the US dollar decoupling from stocks and bonds?" And so the article went on, written by some analysts, the article went on to say, hey, the dollar for the last few months, it had been following the stock market higher. It had been following interest rates higher. Then all of a sudden today, the Dow breaks 20,000, 10-year treasury yields break above 2.5%, and the dollar did nothing. In fact, the dollar went down a little bit today. And this analyst said, so is this a decoupling? See, they don't see the correlation, all right? But she went on to say, no, this is just a pause, all right? They just don't see it. So yeah, for a while, the dollar was following. I mean, look, portfolio flows, which is another way of saying investor behavior. And don't forget, the vast majority, the crowd, the zombies, they don't understand MMT. They don't understand these relationships. So they see the stock market going up. They've been, they've been kind of programmed to believe that high interest rates cause the currency to go up. I've explained this. It's always funny to me because people understand that high interest, there's an inverse relationship between interest rates and bond prices, right? Interest rates go up, bond prices go down. The discount to par in the bond price reflects the yield. And a currency is a bond of zero maturity, right? So they don't understand that, but they understand it with bonds. Anyway, so this analyst said the dollar is just in a pause because the fiscal stimulus of Trump and the interest rate hikes that are coming, that's all going to be bullish. She even goes on to say, and Trump wants to build a wall, and that's going to create demand for cement and bricks and all this crazy stuff. So that's going to be bullish for the dollar. Cement and bricks. So, and this individual, her name is Kathy Lee, and she's a high-paid analyst at one of these Forex firms. Totally clueless on this. So, in essence, what happened today with rates going up and the dollar going down, okay, that's exactly how it should be. And it's exactly how I have been explaining it to you. Oh, yeah, she also threw in there, the inflationary thing is going to cause higher rates. No, higher rates are causing the inflationary thing, all right? Now, if we're going to talk about a decoupling, we got to talk about a stock market decoupling temporarily from the fundamentals. And the fundamentals are rising inflation, or is rising inflation. And as I have been pointing out in my last two videos, look at the curve of the futures market, the S&P futures market. It's inverted. It's in backwardation. Okay? It reflects a rising inflationary environment. But investors are buying this stuff up like crazy right now. Now, I understand from a market sentiment, just from a technical perspective, and also somewhat fundamental. I have to be honest, the fiscal flows have flipped around to positive. They were negative in October, they were negative in November, they were negative in December, all the way up to December 28th. And then they started slowly turning positive, and now they're positive. Not by a lot, but they are positive year over year. So, that is a fundamental support right there. I'm not saying it isn't, okay? But again, it's just interesting how nobody gets it. Nobody gets it. And these are very, high-paid people at brokerage firms and financial companies. The dollar is decoupling. No, it is not decoupling. It is acting exactly as it was supposed to act. And by the way, who called the top in the dollar? I did. When the dollar was going crazy and everybody was saying, the dollar index 103, 104, dollar yen ran up to 118. And don't forget, I was short. I was short that thing at 115, 114. That's all in the money for me now. Okay, all in the money for me now. And I have a lot of you people who are subscribers who did it great, and you held on, you employed the mental game. You're all sending me emails now, Mike, all my currency positions are in big time profit. And great job, guys. Great job. So they don't understand it. They don't get it. They're clueless about it. And what's going to be even more interesting and fun, I should say, is that when rates keep going up, and and don't forget, gold's up $100 from where the last rate hike was. All right, and it's up. I don't know, probably about 100, anywhere from 160 or $120 from the first rate hike in December 2015. So it's going to be interesting and it's going to be fun when the interest rates keep rising and the dollar keeps weakening. That's going to be, and they're not going to get it. I'm telling you, they're not going to say, remember what I spoke about the other day about any legitimate science or any science that would call itself a legitimate science would be laughed out of existence if its theories were not shown to at least have some relevance in the empirical evidence, observable. Not observable. They're going to keep sitting there saying, rates are going up, the dollar's going up. I had a guy, he's sending me emails, talking about how the yen is going to continue to go down. Meanwhile, since the rate hike, the first rate hike in December 2015, the yen is up 10% against the dollar. We had 2 rate hikes, okay? And the yen is up against the dollar. We had already 2 rate hikes. The yen is not down. It's up. All right. By the way, New Zealand dollar pushing very close to a 52-week high. You got all the, and by the way, these commodity currencies, Australian dollar, New Zealand dollar. So, it's very, very, it's amusing. It's comical. It's amusing. It is comical when I hear this stuff. But it should give you comfort. And if you are in a difficult position right now, remember, every position is a good position. There's no such thing as a good position or a bad position. There's no such thing. The markets move around. It's your behavior that determines the outcome. There's no such thing as a good position and a bad position. Look, we choose this business, this game to make our money. You could be doing other things in life. There are many different paths that you could pursue. We chose this. You have to understand what it is. Just numbers moving around. It's how you behave that determines the outcome. You could have everything right. Look, I'll tell you something. Personal story, all right? And I'll finish on this. And I've said this many times in the past. I was always a very good analyst when I started out. I started out already, perceptive, very analytical, all right? I had sort of a great gut sense of what was going to happen. Never really made any money. Made it, lost it, made it, lost it. For years it was like that. Made a lot, lost a lot, until I realized that it was me screwing myself up, not the analysis. The analysis didn't make any difference whatsoever. It was good analysis, really good analysis. But I could have had crappy analysis. Doesn't make a difference. I could have had crappy analysis and made more money. I knew guys on the trading floor when I was a floor trader who didn't know anything about economics, who didn't want to know, who'd never looked at a single economic data release, didn't care. And those guys, they could run circles around, the most educated economists or market analysts. Never looked at a chart, these guys, nothing. Tough street guys, went in there, knew what they wanted, which was to make money, and they did it. So there you go. Every position is a good position. It depends on what you do with it. All right, everyone. Bye.